Now, almost 10 years later, the housing market showing some signs of life once again. Joining us now in a Fox Business exclusive is Hovnanian Enterprises Chairman and CEO and President, Ara Hovnanian. Good to see you, sir. Thanks so much for joining us.
Glad to be here.
How would you characterize where we are right now?
Well, we're in the early innings. It's been a very, very protracted, great recession for housing, but we're digging out of the hole as a country and making steady progress.
Now, your most recent quarter, a lot of analysts talked about it was below their expectations, but you put a long-term growth plan in place. What's long-term for you, and what does that growth plan look like?
Well, first of all, our most recent quarter was Friday we released, and that one we beat expectations, made $40 million in profit, above our guidance, above consensus.
I guess it was the third quarter.
It was the third quarter.
Sorry about that.
Yes,
it was the third quarter that people were concerned about.
Yes, but fourth quarter was great, and we ended with a 49% increase of backlog going into our brand new year, fiscal 16. Our long-term plan is basically finally capitalizing on the growth. We had access to more capital. We were able to grow our inventories. We started a lot of developments. The sales are happening, which is why our backlog is up. So we're looking forward to a breakout year in 16.
It was one issue was the mix shift in terms of pricing. How would you characterize that right now?
Yeah, we build in lots of different markets at lots of different price points, everything from $100,000 to $2 million. So a quarter can vary a little bit depending on what homes happen to sell and close that quarter. But generally speaking, there hasn't been a huge shift, just little bits here and there.
But are we getting to a point, you know, the pendulum always swings too far in both directions. We had an analyst on earlier in housing who was basically saying, look, we're back at 2006 because we're seeing mortgages going out, we're seeing people who really shouldn't be buying a home. We're seeing covenant light. Are you seeing some of the troubling signs again?
So far from that, it's unbelievable. The pendulum in terms of mortgage qualification after the subprime debacle clearly swung all the way to the other side, and it hasn't come back to normal yet. Normal underwriting that worked in the 50s, 60s, 70s is just not around anymore. Everyone is afraid to stand on the limb to qualify someone, so they're being extremely strict. We're far from those problems.
What about prices? People look at real estate, certainly in the big cities like New York, and they're basically saying, look, prices have gotten away from me. I just can't afford this anymore. That things have gotten to a much higher level.
New York is a world unto itself. It's a completely different stratosphere. What we build is to the rest of normal America, so to speak, suburban and semi-urban areas all over the country. Prices are going up, and that's a good thing. Affordability, fortunately, is still at very, very good levels. There's something called the Affordability Index, and it measures the median family income compared to what they need to buy the medium-priced house. That is still very good, thanks to interest rates. Interest rates are going to creep up. I'd be shocked if it's a big movement and if it has a big effect.
Though you do expect the Fed to raise rates December 16th, their next meeting.
Absolutely.
What does 2016 look like at this point in terms of bookings and what you're expecting?
Well, again, our backlog is up almost 50% going into the year. We're expecting to grow. Last year it was a little over $2 billion in revenues. This year we should be over close to $3 billion is our official target. And again, we beat our guidance in the last quarter, so we're feeling pretty good.
There were some issues in terms of delivery for some builders, in terms of delivery to get the house built.
Yes.
Where are we in that?
Interestingly, there is a labor shortage. It's slightly different in different parts of the country, but the housing recovery is coming back, and apartments are coming back, and they all draw from the same pool of carpenters, electricians, etc. So we're having growth beyond what we've experienced in the last few years. So there are shortages, but that's also driving up pricing.
Interesting that there are labor shortages right now. Does the employment market feel like it's tighter to you?
It does.
Yeah?
Certainly in the construction industry.
Well, that's an interesting point, because that's where we saw jobs in the last jobs report, the construction industry, because there's this labor shortage going on, I guess.
Absolutely.
When you look out next couple of years, what is it going to take to get us back to some sort of consistency in terms of growth and really the vibrancy that we were seeing?
I think a few things. Number one, mortgage qualification standards have to get to normal. Not subprime, that was bad, everybody knows that, but at least back to rational lending again. That's number one. And number two is an interesting sociological phenomenon. The millennials are taking their time about getting settled in. The average age of first-time marriage is now about 29.
Wow.
20 years ago, it used to be 24. So people are waiting longer, and that changes their housing needs. They're having children later, and in the for-sale sector especially, that has an effect. But they are getting older, and they are going to take those next steps. So I think it's good sailing ahead. Demographers are projecting slightly better than the last 2 decades in terms of household formations going forward.
And in terms of your improving your own balance sheet, improving liquidity, you've taken steps to do just that.
Absolutely. I mean, clearly the high yield market has been very, very tough. Fortunately, we've got a lot of alternative sources with land bankers, with local banks, with project-specific loans, and joint ventures as well. Lots of interest in partnering with us, and we've done several with some major names.
So look across the country for us. Where are the strongest areas in terms of regions?
Absolutely white hot is the Silicon Valley of Northern California. It's amazingly hot. There's huge growth there. There's a lot of income growth, so super strong demand. That's one of the hottest. Another very strong market right now is Dallas, interestingly. One of the markets with labor shortages because of that. Same with Northern California.
Interesting.
And finally, the third hot spot is Southeast Florida, from Palm Beach, Fort Lauderdale. We don't build in Miami, just on the edge of it in Fort Lauderdale and north. Very strong market.
Is there a glaringly weak spot in the country right now?
I'd say Washington, I wouldn't say glaringly weak, but it's clearly not back to its normal, vibrant economic growth. Sequestering is having its effect there. But hopefully that will eventually get back to normal as well.
One of the laggards there. Ara, good to see you.
Good to see you.
Thank you so much for joining us. We appreciate it, Ara Hovnanian, joining us there.